Hi everyone, let's have a look at my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we're looking for a three-wave structure in a WXY, where this wave Y is then likely to be a zigzag in a five-wave move in a wave A, followed by a three-wave move in B, and then eventually another impulsive structure to the downside in a wave C, where the most common target area for the green wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of X, which is between 25.9k and 25k. Now, as you can see, price did hit this target box. However, the wick over here might be part of a corrective structure and not the actual zigzag, because on the lower time frames, which I will show in a second, this looks to be an ABC expanding flat, and therefore wave A would end at the red candle over here, and this red candle did not hit the one-to-one or not hit the target box. So that is a important little detail, where if we then look for wave B, we're looking for a three-wave move to the upside. Now, the high that has been made over here is a valid high for potentially a wave B, where eventually downside might be expected. However, if this is a wave A and this is already the high of wave B and we have to go down for a wave C, the target area for wave C would be far below the target area for wave Y, which is not what we want to see. Because if we take the trend-based fib extension from the beginning of X to the low of A to the high that we made at the moment, then you can see the most common target area for this wave C would be all the way down here, which is even below the yellow target box, which is sitting between 24,850 to 24.3k. So preferably, price will find another move to the upside, another high to be made over here, and then a three-wave structure, where I believe that the area between the golden pocket and the 886 is very interesting, because the golden pocket, taken by the way all the fibs from the high of X to the low of A, has confluence with the highs over here at 28.3k, and we have the blue target box with some interesting confluences around the 786, sitting between 28.9k to 29.2k. So this is a very interesting resistance area for then potentially a move to the downside, bringing us to the potential trading setup over here, which obviously is educational and no financial advice. That in this scenario, if price is moving to the upside but volume is not increasing, like if this is going to be an impulsive structure and it's going to go very vertical to the upside with volume increasing massively and longs opening, of course this is not a great idea. Besides the fact everything I say is not a great idea because it's YouTube and I'm not a financial advisor. So but if price moves to the upside and the volume is quite similar to this move to the upside, then a potential idea from an Elliott Wave point of view might be to enter a short somewhere in this area. Stop loss invalidation is the highs over here at 29.8k for then a continuation to the downside for that wave C. If we then look at the bullish scenario, which it's quite difficult to say which one is my preferred at the moment, because we didn't have low time frame bullish divergences just yet to support the medium time frame bullish scenario. So we need some more information in the upcoming days and actually like this week, right? But in the bullish scenario, we're looking for this to be a five-wave structure in a wave A. Then we have a corrective structure in wave B, and then another five-wave move to the downside in wave C. So now this wick is part of the zigzag structure. Even though it looks like a three-wave structure on the lower time frames, you know, low time frames can be difficult to count. So in this scenario, this is the end of wave C, hitting the target area for wave C over here between the 1 and the 1.236, taken from the high to the low of A to the high of B. So in this scenario, we are looking for upside. Wave C was a little bit shorter in time compared to wave A, which you can see by the checking the fib times, the vertical lines over here, taken from the high of A to the low of A to the high of B. And then you compare the time of wave C to the time it took to develop wave A. So you can see wave C is a little bit shorter, as it is shorter than the one-to-one. However, I like to see wave C finish between the 0.618 and the 1.618. So for me, this is absolutely valid, where then we are looking for an impulsive structure to the upside. And actually an impulsive structure over here is quite difficult. So the lower time frames are not necessarily supporting the bullish scenario. However, we always need a bullish scenario. We also had the trading setup over here, entering at the one-to-one. Stop loss was down here, but should already be break even from an Elliott Wave point of view, no financial advice. And then looking for a move to the upside, where I still think that the 32.4k area is very, very interesting, also because of the 2022 range highs that we have over here for maybe a bit of a liquidity grab before then a move to the downside. But that is something I talk about in my macro and high time frame scenario video. So if I then move to the 4-hour time frame over here, actually grab the chart, there we go, grab the range, I mean the volume profile. So what are we looking at, right? We were all the time waiting for a backtest of the value area high, because trade the range until it breaks, and sometime if you have a little excursion to the outside, you might backtest the value area for then a move to the other side. So the safe option, as I've been mentioning in all my videos, is to wait for a backtest, and then basically if you have this, get a backtest of the value area low, move to the upside. This might then be a potential entry, stop loss below, looking for the point of control, the value area high, and if it continues, we have a triple top over here at around 30k, which is very interesting. And then of course, if we pass that level, in my opinion, we can take this high and move on. But of course, we're not there yet. That's very bullish for where we are at the moment. So now price dipped shortly below the value area low. So we have to see what's happening next. Are we going to continue to the upside, or are we going to make another move, backtest again the value area low, then move up, and then this could again be a potential entry, stop loss below, trading a move to the upside, where the point of control is definitely like a usual in range trading. It is a take profit 1, stop loss likely break even, value area high is usually in range trading a take profit 2, and then eventually letting the rest ride to, of course, higher targets potentially. So yeah, we have to wait and see what price does, but yeah, trade the range until it breaks. But at the moment, no backtest of the value area low. At least we dipped 4-hour candles below, so we have to wait and see what price is going to do. If we then move to the lower time frame scenarios, that's also where it actually starts to become quite interesting. I have 3 scenarios for you guys. This is the bullish one. So the bullish one is quite a difficult one, to be honest. So we have to try and find 5 waves in this structure, which I have done. And then eventually you have an ABC to the downside, which didn't reach the target, right? So let's go through it in a bit more detail. So this has to be a wave 1. Followed then by a wave 2, eventually a wave 3, 4, 5. Now, because wave 1 is extended, it's the longest wave, the targets for wave 2, 3, 4, and 5 change. So in this scenario, the most common target area for wave 2 is between the 236 and the 382 fib, taken from the low to the high of wave 1. And as you can see, price dipped inside this area for then a potential 3 to the upside. Wave 3 has no target when wave 1 is extended. Then we have wave 4, which is respected, but because of the clutter on my chart, I removed the fibs. And then wave 5 should end inside this white box between the 0.618 and the 786, taken from the low of 1 to the high of 1 to then the lowest low over here in 2, because that's the problem. Where are we going to put wave 2? If we put wave 2 over here, then this wave 3 structure is very, very awkward. You can't really count any 5-wave move over here. Is this a 1, 2, 3, 4, 5? That's ridiculous, right? So very difficult to find to count a nice 5-wave move in then this wave 3. But if we put wave 2 over here, then wave 2 is incredibly long in time compared to wave 4. And usually, even if you put wave 2, by the way, over here, this wave 2 is still longer than wave 4. And usually a wave 4 takes more time to form than a wave 2. So that is a bit of a problem in the bullish scenario. However, you always need a bullish and a bearish scenario, and this would be the bullish scenario where wave 1 ends over here, and then eventually we want to see upside, right? We want to see price continuing to the upside. So if we then look at the corrective structure over here, this is either a wave C, wave A, or a wave 1 to the downside. In this scenario, this is a wave A 5-wave structure, followed then by a wave B corrective structure, and then another move to the downside in a wave C, where the most common target for a wave C is between the 1 and the 1.236, taken from the high of this wave A to the low of A to the high of wave B. But as you can see, price did not reach it. And even if I because now I put it on the high of wave B, but even if I put the high of the trend-based fib extension on the little bit of a higher high that we made, you can see we still didn't hit the 1-to-1. And that is important because the most common target again for a wave C compared to wave A is over here, but price didn't reach it. And that has to do like with the bullish and the bearish scenario, because I'm going to get to the bearish one in a second, and this could still be a potential 1-2-1-2 for then a bigger move to the downside. So for me, it's quite important the fact that we didn't hit this wave C most common target area. Now a minimum target for wave C is the 0.618, and as you can see, the 0.618, which actually is like blended inside the 0.5, by the way, sits over here. So yeah, we reached the 0.618, but as you can also see, it's not been very well respected because we traded below for a while and then move up. And also the Fibonacci levels for a potential wave 2, where the most common ones are between the 0.5 and the 0.786, pulled from the low to the high of 1, are not that greatly respected as well. Like we did below the 0.5 over here, but we didn't have a nice clean bounce, bit of a range on the 0.5 and then move up. We didn't hit the golden pocket, which by the way is the most common target area for wave 2 out of the common ones, the 0.5 to the 786. So it's a little bit of an awkward count, this bullish one, as you can imagine. And if price would dip to the downside and basically takes the low over here at 25.8k, it's of course invalidated. If we then move to the bearish scenario, this is the very bearish scenario, then the door might be open for a potential 1-2-1-2 scenario, where this is then an expanding flat in a wave W, X, eventually a 3 wave in wave Y, where we had the potential short setup in this most common target area for wave Y. And if we then look towards the downside, this is now a wave 1 followed by a wave 2. Usually, most commonly I should say, a wave 2 is a zigzag structure, which is a 5-3-5 wave move, but over here is more like a complex structure in a WXY, finishing this wave 2 for then a move to the downside in a bigger blue wave 3. And as wave 3 is the longest and usually the strongest wave in a, well, impulse, you can often count waves inside. I'm actually a little bit distracted by the push. You can usually count waves inside that wave 3. So you then have a wave 1 over here, and then you have a wave 2, before then eventually a wave 3, 4, 5 to the downside, and that ends the blue 3. And if we then look, and that's why I was a bit distracted, to the price action at the moment, which actually looks like we are having some volume in this candle to the upside. That's quite nice. When we look at the targets for then a potential wave 2, and this then being a 1-2 and expecting downside, the most common targets again are between the 0.5 and the 0.786, which is between 26.9k and 27.1k, where an important area for me is the range point of control at 27k, which is the point of control of this whole range over here. So if price can take this point of control and start moving towards the upside, it can be quite likely that price might hit the invalidation level for this scenario, especially with the push over here. Just imagine I'm recording and this might be the beginning of a continuation to the upside. That's actually pretty ridiculous when I'm talking about the bearish scenarios, of course. But hey, we don't know what price is going to do, right? It might stop here and turn to the downside. We can only trade probabilities, but this is quite funny to see. So in this scenario, we expect wave 2 downside invalidation is taking the high over here. And if we then go to the low time frame zigzag scenario, or at least the low, well, this is then the zigzag, what I mean in the zigzag scenario, we have this to be a 3 wave in a W, looking for a 3 wave in a wave X, and then continuation to the upside in a wave Y. So then it is a 3 wave, and then another 3 wave, because this wave X has to be a 3 wave structure, right? So in this move X to the downside, we're then looking at a wave A, wave B, and then again a wave C to the downside, which didn't hit the most common target as already explained. Now potentially we might change it up just a little bit and put wave W over here, where then the count to the downside is not an A, B, C, but it's going to be a W, X, and then eventually a Y to the downside, where this is an expanding flat in the W, then we have a complex wave X, and then we have a zigzag, which is a 5-3 wave move to the downside in a wave Y, where still the most common target area will be around this area, including the daily naked point of control at 26.3k. So even though price is moving to the upside, as long as this high is not taken, we can still find potential downside and still be bullish as well for a return to the upside, ending wave Y, ending wave X, and that could be the sign then to move to the upside for the bigger wave Y, where then again we get back to the targets that I showed on a medium time frame, which includes the highs over here at 28.3k and the target box a little bit higher between 28.9k and 29.2k. So yeah, interesting stuff happening also on the lower time frames. And if I quickly open the CVD chart over here, AGGR, you can find it in my Discord. We had today throughout this range actually, so we had bullish divergences over here, which of course have been invalidated, and we also had bearish divergences, which I actually forgot to tell you guys about in the morning update. Lower high on price, but higher high on the yellow CVD. Bearish divergences, these played out very nicely indeed, and now we have this push to the upside after price over here wicked below the low on the very low time frame, but we did not, or still not, have any bullish divergences, interestingly. So price is making a higher high, but if I zoom in just a little bit, you can see that on the yellow line, we definitely do not have bullish divergences, because you want a higher low on price, but a lower low on the CVD, which clearly cannot be seen. But also on the blue line, you can see that over here, the low on the blue line, on the right side, the blue line has not dipped below this level, so there's no bullish divergences at the moment. That does not mean price can continue to the upside, but it is at least interesting to see that there's no real absorption going on for eventually a continuation, I suppose, to the upside, like the very bullish scenario in a lot more upside to come. But hey, that's what I wanted to say. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.